Good evening, traders. Welcome to tonight's webinar. It's Eddie here from TradeView, and we also have tonight, as you're well aware, our very, very special guest for this special webinar event, which is going to go for 2 hours. That's twice the amount of webinar you're going to get tonight. We've got Larry Pesavento all the way from Larry. I think you're there. Where are you from, Larry?
Tucson, Arizona, where it is snowing in the mountains behind me tonight.
There you go. Not only
Yeah, it was 80 degrees this yesterday, and now it's snowing. So we're having a very weird storm. So
excellent, fantastic. Now, just to let you guys know, there's a lot of technology going on to get Larry here from Tucson, Arizona, and us here from Melbourne. We're going to be sharing different screens and all sorts of things like that. So I'm pretty confident we've got it all worked out, but just in case we lose you on the webinar, please try and rejoin by the link. Just in case, we will be able to restart it and get back on again. So just in case, if anything happens, hang around. We will be back, but I think we're good. By the way, can everyone hear Larry?
10-4. Looking good, Billy Ray. Feeling good, Lewis.
All right, everyone said yes.
Ready.
Fantastic.
Good.
All right, step.
Hey, folks, those of you that are my friends and students, don't Skype me, please, during this presentation, because it'll pop up and you'll still get your checks, and I'll tell you when to start to applaud, but just don't Skype me during this presentation, please.
All right, thanks, Larry. My Skype switched off, so but I don't get as many messages as you, so it's not a problem. All right. Let's get into it. So, well, welcome guys to tonight's webinar. Thanks very much to IC Markets for putting this one on, and obviously thanks to Larry for being able to co-present with us. We really appreciate it. We've got a fantastic webinar lined up tonight. The theme for tonight's webinar is, excuse me, from analysis to automation. So Greg's saying they're gold breaking out to the upside now. I saw that before, so Greg's right. Lucky we're an automated trading firm, and we're trading that without me having to watch it. Anyway, guys, this is a pretty interactive webinar, so do ask plenty of questions. We will actually have some question time at the end with Larry, so you can ask him here on the chat and I can read them out to Larry. As I said, tonight's theme is from analysis to automation, and what that's going to involve is it's going to involve Larry presenting what he does best, which is pattern trading and specifically harmonic patterns, and then we're actually going to show a little bit later how to automate that. So thanks to Larry, thanks to IC for having it. All right, as always, guys, here's our risk warning, just to let you know that this presentation is provided for information purposes only, and it's not to be regarded as financial product advice. Now, just a little bit for you guys who don't know us, a little bit about TradeView. We're a privately held prop trading firm in our 7th year of operation. We've got 9 traders here. We trade all sorts of different products across the globe. And we're a systematic trading firm. So what that means is we follow a strict set of mechanical rules. Okay, a little bit about me, just so you know who's speaking. I started trading in 2013 and actually had to take a screenshot of my IC Markets account, which I'll show you later on tonight. Not the actual account balance or anything, but just had to show you something in the members area. And you can see there where I opened up my first account with IC Markets in 2013. I wanted to trade at a firm, but I really didn't know anything about trading whatsoever. I did want to become an automated trader though, and I got introduced to Rob, who's the owner, and he's not the head trader anymore. Ali is, but he's the owner of the business and was the head trader at the time. I learned how to build automated trading systems, and we're going to show you a little bit about that tonight. And now I'm here full-time building and trading systems. About Larry. Actually, Larry, why don't you take this one on?
Okay. Yeah. Well, I've been around I started, my first trade was 1959, so it's been 7 decades. And I've been a member of the Chicago Mercantile Exchange. I ran Drexel Burnham's operation for commodities in Beverly Hills from 1976 to 1982. I was a Merc member from 82 to 85. I worked at Commodity Corporation from 85 to 86. I've been pretty much on my own ever since. I've written a few books, that kind of stuff. But, that's pretty much it. I'm from Southern Indiana, a little country boy, and this is how I all got started with one of my college professors getting my master's degree. I have a BS in pharmacy, master's in business. When I was doing my master's degree, I happened to meet one of my college professors from Indiana, who was a trader, and he's the one that got me started doing it, and I just got lucky. And I've been, yeah, I just been fun. It's amazing what, they say about this is, Confucius say, if you have a job that you love, you're on vacation every day. And here it is 1:30 in the morning, and I'm actually looking forward to doing this today. So it's been fun.
It's been working out well.
Yeah, beat my other job.
Yeah, excellent. Fantastic. All right. Just a little bit about you guys. We know about Larry and myself in TradeView. You can just see one of the questions there. Somebody said they can't see anything on the screen. I think that's only one person, so I think we're good. So sorry about that. I don't think it's from our end. So just about you guys there, you can post into the chat. How long have you guys been trading for? So, sort of 6 months, 12 months, more than 12 months, whatever, let me know. There we go, 5 years, 2 years. Greg sees gold going up. Fantastic. Greg's obviously a gold trader. I do like trading gold also. 12 plus years for Dave. Hey, David, how are you? There's a lot of people there we know, but a lot of people I haven't spoken to on there, of course. Stefan, just over a year. Wayne, 12 years, 5 years for Alan. Okay, 3 years, 1 year. A newbie, Sandy, fantastic. Brand new, Dung, how you doing, mate? Good to have you here. 10 years, 1 year. So, there's a bit of a mix. But look, I always say this, no matter what your experience is, I'm sure you're going to pick something up from this webinar. So if you're new, great webinar to start with. You're going to learn some fantastic stuff from one of the masters of pattern trading, and also you're going to learn about automation, of course. If you're a seasoned trader, then I'm sure there's quite a lot in it for you also. Now, here's already an automated trader? So we're an automated trading firm. Who here's an automated trader? Okay, Alexander, Prissy, how you doing, Prissy? Charles, fantastic. Mike, partly. Bobby, fantastic. All right, a lot of people there. I always say this, when I started back in 2013, I used to talk to people that would call in and want to know how we build systems. Not really many people, well, actually, they want to know how to trade, and we'd sort of talk about system building, but not many people understood what that was. So now probably most of the guys know how to build automated systems. Well, they don't know how to build them, but they've had some experience with them. Who here has faced or is facing some type of challenge in their trading, and if so, what are you what's most challenging? Well, this is probably one of the ones that not many people want to own up to, isn't it? But I know we've all faced challenges. All right, trying to learn different methods, consistency, emotions, growth is too slow, dealing with perceived bad luck, patience in automated trading. All right, what have we got in there? I can't find a consistent strategy. Black swan events, risk management, stress. Well, there's pretty much everything in there. Getting out of drawdown. Okay, you guys, once you let loose, there's quite a lot of challenges. Well, look, hopefully, a lot of the things in there, because we're an automated trading firm, we don't really face a lot of those challenges because the things like your risk management, the emotions, the stress. I mean, a lot of that stuff, I won't say it's all completely disappeared, but are you able to manage a lot of that a lot better because, we're able to build the risk management into the system. We understand how the systems work, so, we're not as emotional about it and all kinds of things like that. So, look, hopefully, guys, obviously there's a lot of things that you want to learn and you find challenging. Hopefully you can pick up a lot today, and if you've got any more questions, you can always get in touch with us. And why did you come to this webinar? I know everybody's going to say Larry, but let's see. All right, we've got a few people there that said Eddie. Oh, come on. No, I'm kidding. There's quite a lot of Larrys in there. Harmonic patterns, learn a new model. Part of developing in their automated trading. Get more ideas. Larry. Oh, there we go. To learn from a legend. There you go. That's from Mark. to hear the godfather of trading. There you go. I'm serious. These are all in there. All right. Okay. It even says here, Larry, I'll read this out. I'm going to read yours out, Prissy. See both handsome men. Jokes. I don't think it's a joke. I think it's true. But that's fine. Fantastic. Okay, a lot of good reasons. All right, let's keep going. All right, what we're going to cover tonight. So we're going to learn some of the key harmonic patterns that Larry uses. He's going to talk about that. We're going to look at basically some advanced sort of Fibonacci ratios and look at them on a level that you probably haven't thought about before. We're going to look at automating some harmonic patterns, and we did say this in the email that went out. We said we would give a free indicator, harmonic pattern indicator, to the first 250 people. So put your hand up if you were in the first 250. Okay, everybody's putting their hand up. I don't know if that's true. So hopefully I'll see IC Markets will probably message us a bit later, and they'll let us know who it was. So we'll see about that a bit later on. And also we'll show you some live test results. In that, what we're going to do is we'll do a back test, automated back test, and then we'll show you the results, so you'll be able to see exactly how the model places trades and all that kind of stuff, which is what we do on a daily basis. And then we're going to do up to an hour of live analysis and Q&A with Larry. So like I said, it's a 2-hour webinar, so get ready. I'm going to hand it over to Larry in a second, and Larry's going to run through the first part. Then he's going to go through and show you some actual live analysis. Then we'll automate the model after that. We'll start automating some of the types of patterns that Larry uses, and then we'll come back to Larry and some more Q&A. And I'll also show you how you can get the indicator right at the end, and then how you can start building some automated systems yourself. So absolutely jam-packed webinar. We had well over 1,000 people register, so it's going to be pretty great. All right. What I'll do here, I'll hand over to Larry. So Larry, he's already done a little bit of an introduction, but mate, take it away.
Okay, let's get started. You want to put up the first chart there, and we'll just go through some of these things. What I'm going to try to do, folks, here, I have prepared something that I think is important to me. I don't know if it's going to be important to you or not, but if you were to have asked me when I was 19 years old, when I first started trading in the early 60s, how much I would pay for this 2-hour presentation that I'd give you tonight, I would say it would be priceless, because this is the sum total of what I think are the basic things that will take you from being a novice to being a professional. I'm talking to the 2 or 3 people out of these hundreds of people that are out there. Most people will look at this, gee, that looks interesting, but they will not follow through. They will not have enough interest in it to even move forward. But my whole life has been related to pattern recognition. Started way back in the mid-60s, and fortunately I had some great mentors along the way. John Hill, oh my gosh, been so many of them. Ed McClure, God, Dave Nelson, just so many guys that helped me along the way. But the sum total of the things that we're looking at tonight started in 1968 when I had moved to Los Angeles from the little town in Indiana where I lived and where I went to college. Got my master's degree, and I had a great job working for a big pharmaceutical firm. And here I was in Los Angeles, and guys, I had to go to Hollywood to see where the stars were, and there were none there. I met a few people, and they said, well, the stars are up there on Mulholland Boulevard at the Manly Hall Institute. And I knew who Manly Hall was because one of my college professors told me when I got to Los Angeles to go to the Manly Hall Institute, because that's where the great stuff on mathematics and geometry and things from ancient times. I'm talking Sumerian, Babylonians, Egyptians. It was just really incredible, the stuff that was there. And whenever you went there, they had a cafeteria. There was always some celebrities there, and I was there all the time. Manly Hall was the fellow that started it in 1928. It's a university now. And but at the time when we would go there, every month they would have a guest speaker, and I never missed those. It was $10 to go. And one night I remember very vividly because it was, I believe, 1973, and the governor of California and his wife were there. That was Ronald Reagan and his wife Nancy, who were later President and First Lady. They were there that night, but I never missed one of those for many, many years. Manly Hall passed away, I believe, in 1990. 1982 or 1989, somewhere in there. He was in his 90s and did a great job. He was born with a platinum spoon in his mouth, and all he ever did was to share the information that he had learned from when he started at the age of 13. He wrote a book called Secret Teachings of the Ages, which has all kinds of things about, Pythagoras and all the other stuff that's available. But what I'm going to try to just give you what I think is the best. This is not rocket science, folks. There's no physics. There's no algebra. If you can add, subtract, multiply, and divide, you can do this. It's really not very hard. It's just a question of understanding what you're looking at, and mainly understanding, the main cycle, which is the 9-inch cycle, and that's a cycle between your left ear and your right ear. If you get that one right, the rest of it's real easy. So we're going to prove to you that this works, and we're going to several different ways of doing it. So the next one we're going to take a look at, you want to go to the next slide or the next topic there, and we'll just move on to we're going to look at the relationships of sacred geometry in the Fibonacci summation series. The Fibonacci is part of sacred geometry, and we're going to be looking at a little bit of that. And the next one we'll look at will be the how to find multiple cycle tops and bottoms using pattern recognition. And then we're going to cover the importance of the opening price, how to use it effectively at the very end. We're going to be looking at that. But I'm going to go through 20 slides here. And of course, the last one, which is very important, is the one pattern that controls all of pattern recognition and why the markets work the way they do. So why don't we start out with the very first slide, and we'll get started here. This is Pythagoras, folks. He was born in 600 BC. He's the father of modern geometry. He is a squared equal b squared. C squared is, very, very important. But there was very little known about Pythagoras. This painting that you're looking at, this is a life-size painting. It's in the Institute there in Los Angeles at the Manley Hall Institute. And if you'll notice here, you'll see that this is important because you'll notice that Pythagoras is holding a triangle. And if you look at the triangle above his head, you'll see the little triangle with the 10 little dots in here. You notice that he's pointing to a triangle on the parchment here. You see another triangle on the parchment that's there. If you look at the far left on the floor there, you see the tree of life from Safarial. You see the relationship to music. You'll see the two proportional dividers. And most importantly, look at the globe there, folks. This was 600 BC, okay? And Pythagoras, 600 BC, he already knew that the earth was round. Not only did he know that the earth was round, he knew that the distance between the earth and the moon was 255,000 miles. He already knew that. The problem was people were really after him because, he had to go to what they called the secret school, and there's a lot of, mystery behind that, whatever. But anyway, this particular painting was done by Augustus Knapp, who was a very good friend of Manley Hall, and it's still in the lobby there at the place. But what he did was he had studied his whole life. He had studied Pythagoras, and all they had about Pythagoras was just a few bits and pieces, a few sketches of some of the things that he did, and the materials that he used, and that's what he put together to do this painting. But there were actually no pictures of him, much like there are of Jesus. They don't really have a good picture of Jesus, but this is pretty much the same type of thing that we have. But this is why we're going to be doing this, because it all related to some of the work that Pythagoras did, but it's all based on these triangles. You'll see that triangle at the top. That's really important when we'll learn how to see that as we go through. If we'll take a look at the next slide, which tells us a little bit about the Spira Mirabilis. Now, this is about Fibonacci, folks. This is the thing that is the oldest living organism on our planet. This is the ammonite, and this is the seashell is basically what it is. But you'll notice that the relationship in this triangle, you see A is the top of the triangle, CB, and all those are related to 61% retracement. In other words, the CB move is 61% of the AB move. That's really what you're looking at. And all it's ever doing is it's expanding and contracting, and that's what you're doing in the markets. Folks, this is an easy business because the market can only do three things. One, it can go up. Two, it can go down. And three, it can go sideways. So all you're trying to do as a pattern recognition swing trader is to figure out which one of those areas you're trying to hit, and that's the whole key to what we're looking at. So the next slide we're going to see is the most important slide of all. This is why you lose. Okay, take a look at this, folks. This is a slot machine. Nowhere on that slot machine does it tell you that I've taken in $1.2 million more than I've given out. Nowhere on that slot machine does it tell you you have no chance of beating me long term. Does it? It doesn't do that, do you? It doesn't tell you how much you have to risk to see if you're going to win, does it? No, that's difference. This is the difference between gambling and speculation, folks. Gambling is based on a predicated game of rules, whether it's a slot machine, a football bet, a soccer bet, a basketball bet, whatever it happens to be, roulette, craps. It's all based on an event that occurs that once it starts, the game goes to the end before it can be paid out, whether it's the flip of the coin, the spin of the wheel, the roll of the dice, the toss of the ball, the blow of the whistle, whatever it is, it goes on until it's end. You have no control over it. In speculation, you have total control because you can determine when you want to get out, how much you have to risk. And remember, the amount that you have to risk is the amount that you only have control over. You don't know how much money you're going to make on a trade. You don't even know if it's going to win or not. But the only thing you can really control is how much you can lose. And that's the difference between a winner and a loser. A loser thinks, how much money I can win. He looks at that slot machine and he sees the 4,000 coins. Oh boy, I can buy a lot of things with 4,000 coins. The loser thinks that way. The winner thinks, how much can I lose? Well, if I put $20 into that machine, that's how much I can lose. So you must think like a winner. A winner thinks how much money I can lose. Always be concerned on what your losses are. Your profits will take care of themselves. So remember, this is really, really important. The reason why you lose, there's really the four major reasons that, and fear is the main reason. Fear, and the acronym for fear is false evidence appearing real. Well, there's four major fears in trading that you have to get over. And they're real simple. Let me just run through these. These are from my good buddy, Mark Douglas, who wrote that book, Trading in the Zone, here in my office here in Tucson. We lost Mark a couple years ago, too young. But anyway, the four major fears are the fear of being wrong. Folks, you're going to be wrong a lot, so don't even have that fear. That's ridiculous. The second one is fear of losing money. You're going to lose, so don't even have that fear. Number three is the fear of missing out. You're darn right. You can't be there all the time. You are going to miss things. And finally, the fear of leaving money on the table, which is the most ridiculous one of all. The only person that doesn't leave money on the table is the person that gets the high tick on the short sale and the low tick on the buy. That's the only person that does it. And it ain't me. So, you don't, those fears, just get over it. You got to, this is all about risk. You got to take losses. Losses like breathing. If you don't trade, you're not going to have, you're going to have losses. The people that tell you they don't lose, go run away from those folks, because that's not what's going to happen. Okay, let's move on to the next slide. And this is really an important slide, folks. This was from an article that was in the Business Week in April the 17th of 2000, and it's from the MIT, Massachusetts Institute of Technologists. This is from Andrew Lowe. He's in charge of that group, and he's the one that brings the quants to Wall Street. He runs a $3 billion fund that is all donated to cancer research. The guys that come out of his school at MIT, it's called, I think it's Advanced Mathematical Systems or something like that. But he wrote a paper in Business Week, and this was the sum total of the paper, and this was in April of 2000, as I mentioned. And what he did was they ran a study from 1962 to 1996 where they looked at over 800,000 observation of chart patterns. Things like double tops, double bottoms, triangles, all these different things. And he put them into a book that later on, in about a year later, called A Non-Random Walk Down Wall Street. The book is incredibly mathematics, and I'm going to show you just a few little tidbits about it because it relates to some of the stuff we've seen with Pythagoras. But again, this can all be done with a little handheld calculator, a straight edge ruler, and add, subtract, multiply, and divide. All this is doing is showing the scientific reasoning behind this. But he proved empirically that patterns, not only are they predictive in nature, but they repeat over and over again, because the market does the same thing all the time, folks, up, down, sideways. And all we're going to do is look at some of these patterns and show you the ones that I've learned. And there's others out there, of course, but I'll just give you a rough idea of what we're looking at. as we see some of these things. But it's important to remember that all this is definitely related to how the market actually works. Now, the next one we're going to look at is the next chart here is a part of the sacred geometry. This comes from a little book called The Little Book of Secrets. This is all part of the work that Dr. Andrew Lowe did. And this is very important, folks, because if you've never had any experience with Fibonacci, let me explain to you why it's so important. If you'll notice, the top things are related to the cosmos and astronomy and stuff like that Dr. Lowe worked on. But if you look at the bottom there, you'll see that same triangle there, and you'll see the 1.618 expansions and how the circle becomes triangles and stuff. And all we're doing with triangles is we're looking low, high, low, high, low, high, that type of thing. But if you'll notice the Fibonacci numbers there, where it says 1, 2, 3, 4, 1, 2, 3, 5, 8, 13, 21, 34, 55, etc., and you'll see all those numbers on the side. Well, when you get down to the ninth integer, right after the eighth integer, and when you get down where it says 34 plus 55, 34 plus 21 is 55. You'll notice there that on the right-hand side, you'll start to see that as the market, as you divide 34 by 55, it's 0.6182. When you do the next one, it's 0.6180. So it goes higher, lower, higher, lower, higher, lower for infinity. Now, what's interesting about this, and this you should do this yourself, you should do this with your kids because it's really interesting. Take two random numbers, folks, any two numbers that you want, and take those two numbers. Let's take the numbers like 628 and 534. You add 628 and 534, you take that sum, and then you do just like you did there. You take the sum, and then you divide it by the other one. And when you get down to the eighth integer, you're going to be exactly at 0.618, and it'll go higher and lower and higher and lower. What that means is there's total, in this infinity thing that you're looking at, there's such an incredible order. You stop and think, two random numbers, and you add them together, and they come out to the 0.618 after the eighth integer is really quite amazing. And that's what we're doing with these markets is we're trying to see that these numbers that we're looking at, why they appear, heck, I don't know. All I know is I see them all the time, and I'm able to determine, what my risk is, when I'm looking at these things. So, that's neither here nor there. So this is an important one, to really take a look at it because it's very, very interesting. The one thing about this is when you're looking at this stuff, remember that Albert Einstein, he said that Pythagoras was the smartest man ever to walk the face of the earth. He said there was God and there's man, and he said in between was Pythagoras. And another favorite quote of mine from Einstein, he said, God does indeed geometricize, and he says God does not roll dice with the universe. So these are some pretty smart dudes out there. So let's move on to the next one here because this is one that's it's quite interesting, but this is known as the Sierpinski triangle. This is part of the work that Dr. Lowe did in his book, The Non-Random Walk Down Wall Street. But if you'll notice that triangle that you see there, you remember the one that I pointed out to you that was over the head of Pythagoras with the little dots in it? That's the Sierpinski triangle, also known as chaos theory. And basically that means if you took that dot, reproduced it 10,000 times, you'll come up with the diagram that you see on the bottom. And that's the kind of work that they did to mathematically prove that these patterns do have validity in technical analysis. And this is the reason in the last 20 years why you've seen so many charts on CNBC here in the United States, Bloomberg, also all through the time of the UK in the Financial Times and all the other. Anytime you see a chart, it's mainly because of the work that Andrew Lowe did. And they continue to do that type of work, which is really good. But you don't need to know anything about the Sierpinski triangle. It's just the fact that it shows the mathematics. Let's move on to the next one, which is the geometrics of a price chart. Here's where we're going to start talking about some of these patterns that we're going to be looking at. I got this geometric characteristics of a price chart from my friend over, one of your fellow Australians over in Queensland, Bryce Gilmore. They should erect a statue of Bryce Gilmore, one in Australia and one in New York City at the Market Technicians Association, because he is responsible, I think, for really understanding the relationship of what a chart pattern really is. If you look at the chart patterns that we look at, it's basically a square. We have the X and Y axis, but within that square you have the two right triangles, and you'll see that those hypotenuses of those triangles are related to the Fibonacci ratios that we look. It also contains a pyramid, and that's again what we're looking at. What we're trying to do, folks, is look at the pyramid as we have a low, a high, and a low. And that's what we're trying to do. We're trying to find what those points are. Within that are the circles, because those are related to the cycles that we use. And then on the far left, Bryce puts it all together and shows you the relationship between the circle, the square, and the triangle. And then on the far right, you look at the price chart of X and Y. And what we're trying to do is to find those spots, X, Y, in the future to see, you know, what the pattern would be at that particular time. You're really lucky here, folks, because the folks here at TrendView have got some really cool stuff that automatically does this stuff for you. I met these folks about a year ago, and they do some really great stuff, and I was excited to do this with them because you're going to be really, it's going to knock your socks off when you see what they have for you later on when we look at this automated stuff. The stuff I'm doing is that's basically Mickey Mouse stuff. I mean, it's ABCD type stuff, and it's really quite simple. Okay, the next one we want to take a look at is a little more complicated, but this comes from another very rare book that was written in 1972 by William Garrett. That was a thrust for the thrust method of stock market analysis. He was an engineer. The book came out at the same time as Hearst's book, James Hearst's book, The Profit Magic of Stock Transaction Timing, in the early 70s. This book cost $29. The Hearst book cost $8.95, and so this book only sold 200 copies, but it was really the better book because it really told what cycle theory is all about. You can see the square, the circle that Bryce had talked about, but you notice how it expands in an elliptical formation. And if you look at the right there, it expands in the ratios of 0.618, 1.618, 2.618, and then out to pi, which is the circumference of the circle. You don't need to know any of that. All you have to be able to do is draw a line, and you're going to be just fine. So let's take a look at the next one. These are different numbers. This is where we're going to get to a little bit about the history of Fibonacci, but these are the angles that we're looking at. Remember, we're looking at nothing more than a right angles of a triangle. That's what we're looking at. You know, we're basically looking at those pyramids and the what they look like. But if you'll notice, number 1 has 1 angle, 2 has 2 angle, etc., etc., and you get out to 0, which has 0 angle. This was really done by an Arab back in the 800 BC, and unfortunately it didn't become really until great importance until we go to the next slide, which was done by let's get into the patterns first. I'll go through this. I'm going to get back to that in a second, but these are the patterns that I look at. There's others, but these are the simple ones. The little ones, you can see the ABCD pattern. There's a bearish pattern, a bullish pattern. Then one below that is a Gartley pattern where you have an ABCD pattern with a higher high, higher low, and then you have the retracement patterns. The bottom ones are the more difficult ones because you don't have a lot of information to go on. But the bearish ones you'll see are up on the top. But we're going to go through these and make it really simple for you to take a look at it. Fortunately, a few of you you'll follow through with this, and it'll be a big change for you. All right, let's move on to the next one here that we want to look at here. These are the ratios that I like to use. I'm basically looking at 5 ratios here. 618 and 786 are retracement ratios. 1 means AB equals CD, in other words, equal ratios. And then we have the expansion ratios, which is 1.27, the square root of 1.618, and 1.618. There are other ratios involved, but the things that I do, I keep it as simple as possible. This is what I like to see. Now, I do use 38% occasionally, and I do use 50% occasionally because they are Fibonacci ratios, and I do look at them. For this purpose here, my main thing is, of all the people we've got in here, if I can convince just like 5 people out of however many we got in here, I'll be a happy camper. Because most people, either they'll get bored with it or they won't follow through with it. But if you'll spend a little bit of time, I think it's going to be you'll be able to see that you'll be able to do this pretty easily, actually. So let's move on to the next one, and this is where we get into some really fun stuff. This is Leonardo da Vinci's picture out of the book called the Codex book, and basically if you look at the far right corner in the very bottom, it says 0.618. What da Vinci is telling you here is that the ratios and proportion of the human body are related to the Fibonacci sequence of 0.618. As you can see, the top part of that writing up there, that's written in Italian, it's written backwards because da Vinci was a tiny bit paranoid. He could also write with his left hand and his right hand equally at the same time, and he could write backwards. So the Codex book is all written backwards. That's why it's called the Codex book. It was bought by Bill Gates, I believe, in 1989, and he gave it to the Smithsonian Institute. He paid $20 million for it. It's probably worth 10, 20 times that right now. But this was done, of course, in the 14th century, and the one that we, of course, Fibonacci, he did his work in 1242 AD, where he was talking about a paper called Liber Abaci, where he talked about how these numbers all related. Let's go on to the next slide, which is from the period of 2500 BC, and this is from the Egyptian, one of the Egyptian tombs. It shows that same relationship that Da Vinci was talking about. If you'll notice there in the lower left-hand corner, you'll see that those relation proportions come out to 0.618. Now you'll notice the spiral that's there that shows the 1, 3, 5, 8. Well, that's basically the DNA spiral, folks. It's affected by all of us. And this is really important, especially in Australia, because this particular sequence of DNA is actual proof that there's never been a murder conviction in the outback. And the reason is they all have the same DNA. Now, I hope that was funny, because in the United States, I use a different state, but it gets a big laugh. Well, that's all. That's the end of my humor for the evening. Okay,
everyone's laughing here on the chat.
I hear the sound of one hand clapping and the fruit hitting the
It's
stage.
going crazy with laughter here, believe me.
Okay.
I'll let you go.
All right, let's move on to the next slide here. And this is really important, folks. Here's where we're getting really where the pedal meets the metal. This is a 30-minute chart, 5 days of the euro. Now the euro jumps around, looks like the cardiac of a dying cat or something. I mean, this thing's terrible. We got a downtrend, right? We got lower tops, lower bottoms. It's in a downtrend. You don't see anything there that makes any sense at all, do you? All right, now let's just do one other thing. Let's go to the next slide and look at the ratios that are there. These are the same ratios that I just talked to you about, all four of them. 618, 786, 1.618, they're all right there. And if you look closely and watch the highs and lows, you can see the ABCD pattern coming in, can't you? Well, that's what we're looking at. So let's move on to the next one. I'll show you why it's important. If it works on 30 minutes, it'll work the next day. And if you just did a price chart to see what the next highs and lows, there you would be. You'd be able to see these same patterns that we're looking at. And all they are doing is you'll see higher bottoms. You see the first bottom, 78% level. You see the second bottom, 61%. If you look closely, you can see the ABCD pattern that ends up there in the far right, but we're going to look at some ABCD patterns here very, very shortly. But now what we're going to do is to go to the last two slides. That is the sum total of everything we're going to be looking at here. This is from a very, very rare book called Profits in the Stock Market by H.M. Gartley. This book cost $1,500 in 1937 here in the United States. That was a cost of three Ford automobiles. They were about $500 a piece, and the book was $1,500. He sold roughly 60 of those books. It was basically it wasn't a printed book. It was a 3-ring binder book, 600 pages. I was given that book in 1970 by a dear friend, and on page 249 of the book, this was the ABCD pattern on the upside. The next one was the ABCD pattern on the downside, and that basically describes, you know, what the markets are doing. They're either going up, down, or sideways, and what you're trying to do as a pattern recognition swing trader is to see, you know, what they're looking at. Okay? So what we're going to do the downtrend on that one. There's the downtrending one. Okay, that's the last of the 20 slides that I wanted to go through. What I want to do now is to just pull up a couple of things here that we can look at, and if I can get control of the charts, I'll just start out with the Australia. I want to do a little bit on the Australian dollar, and then I want to do a little bit more on the euro, because the euro, folks, I know you're not going to believe me, but if you could understand what the euro's doing, I mean, it does the same thing every day. So if you can figure that out, I mean, it's not that hard to figure out, and you're not going to be right all the time, but you're going to be right more than you're wrong. But it doesn't do anything, you know, that it doesn't do every day. I mean, it's really an easy one to trade. There's nothing better to trade on this planet than the euro. There's nothing more liquid. There's nothing more predictable than that euro versus the U.S. dollar. There's just, it does $1 trillion a day, and it you know, it's predictable. It really, within limits, of course, you know. That's basically what I'm trying to say. Can I get control of the machine now? Well,
that's a good question. Let me try for you 1 second.
Okay.
All right, here we go. Fingers crossed.
Where's that? Show my screen?
Coming through. I think. There we go. I can see your screen, Larry, so it should be good.
Okay. Okay, now remember, boys and girls, when we started this, I said this was going to be easy, and when we showed those last two slides where AB equals CD. Now, this is a monthly chart now on the euro, on the Australian dollar. Now, wouldn't it be nice back in June or July of 2009 to know that that was a top up there? Well, let's just do this. We'll take a little. They got a great software program here at TrendView. I want to draw this in like this. You see that? There's your AB leg right there. You want to see that? We'll just click that on like this. And then we hit, I hope I do it right.
Hold control and drag.
It's Alt Control?
Oh, hold control. Hold control.
How do I hit hold, though? Which
hold,
one's hold?
Hold it down. Control.
Control. Oh, control. Okay. And then just move it over. There we go. And there's your ABCD pattern right there. You see that? Very simple. Well, you got really lucky on that one. Well, let's try to get lucky one more time. Let's just draw it again. And this is monthly. We're going to get down to where we can really make some money here. But there's your ABCD pattern right there. Okay. We're going to clone that just like that. And then we're going to take this and draw it right up here. And there's your high right about there. So spot on. We can do this all day long. I don't have time to do it all day long because I want to get to where we are here in the Australian dollar right now. What I'll do now is I think I'll just let's zoom in here. Yeah, this is what I want to see. There's what I want to get to. Hold on here. I got to go out just a little bit in here. Yeah, now I got to blow this up a little bit. How do I stretch this out a little bit? Blow this up right in here. Let me try. Let me do it on a weekly. Let me do the weekly. There's what I want right here. Here's the weekly right here. All right. Those of you that I don't want to go through all these ABCDs. This is, Mickey Mouse stuff. You can do it yourself. Like my good friend Jim Twentyman says, defy human nature. Do the work yourself, and you'll get something out of it. I'm giving you some ideas. This doesn't mean anything, folks, until you learn to do it yourself. I mean, it really is. Just look at these ABCD patterns that are here.
Hey, Larry, sorry to interrupt. I just got one good question here, which I think you're going to do. Stefan says, can you please draw the probable future chart, Larry, which I think you're going to do. So I just thought I'd pop that in there.
What's a probable future chart?
Well, what's going to happen in the future? What you think?
Well, that's what I'm trying to get to.
Sorry, man. I'll let you
go. No. I just want. That's what we're trying to do right now is to see where we are.
I just thought that you had the question. All good.
Yeah. No. Let's see. Look at it. As you can see right here, let's just blow this up just a little bit here. Zoom in there. Yeah, here's what I want to see. Look at this, folks. You see what this is right here? This is where the bank robbery occurred in Japan back on January 3rd. When the Japanese banks came in and, pushed the price of the euro and all the other stuff, crazily down. This is a, big, hanging man pattern. But look what you have here right now in the Australian dollar. And those of you that follow me, you already know, where we stand with this. But look at this, folks. You have a head and shoulders pattern here. And by definition, the left shoulder should be equal to the right shoulder. As you can see, it's very, very close. If you look at the time frame, in other words, go from, let's just do it right here together. If you take the time from here to here, you'll see that right there like that. And then you hit control and move it over there. And there you see. So there's your head and shoulders pattern. You got perfect time symmetry. And so you're right at this level right here. Now, the only thing that you don't have right here is you'd like to have a perfect A, B, C, D move right here. This is where I'm trying to explain to you where we are. Because if you look at this closely, if you take your low to your high, okay, that brings you in at the 50% level. Here's your 61% level. See, this is where I think we're going to get to one more time before we finally have one hell of a move in the Australian dollar. And the reason I say that, look at this. Here's your AB leg right here. There's your AB leg. Okay, we're just going to click it like this, and then we're going to clone it, and we'll move it over here. Oops, it didn't clone the way I wanted to. It comes right down exactly to the 61% retracement. There's your, oh, shucks. Let me get rid of that. Let me just do it the easy way. Here's your AB leg right here. All right, that's what we're going to be looking at. And now we're going to draw the CD leg in, stopping right at the 61% retracement. You see that makes that a Gartley pattern. There's your AB, there's your BC swing. Your BC swing exactly 61%. Remember, this is weekly, folks. This is not a 5-minute chart. So this is what we're looking at. This is where I think we're going. It's not very far away. You see, this is just around, the 61 comes in right around 69.50, so we're about 100 pips away. I'd like to see one more move down to this level right here. Still be a head and shoulders pattern, only the right shoulder would be a slight lower, but the time would be just spot on. So this is what we're watching here with this particular thing that we're watching. So that's amazing. The other thing that makes this very, very interesting here is because the high that we made here back in December, you'll notice that the high came in right at the 78% level, just spot on. You can see we went 20 pips above it or something like that. That sets up this move right here. And so what we're looking at is a really strong potential for this move to really mean something. Okay, now let's move on to the one. How much time we got? Another, oh wow, we've been going that long already. All right, let's move over to the euro. Let's get over here. Here's the euro. Here again, I'm not going to go through all these A, B, C, D patterns that are here because I expect you to do that on your own. But I want to talk a little bit about some Fibonacci stuff that's interesting. I'll ask you the question, what's been the trend since 2007 in the euro? It's been down, correct? Okay. Now, what we're going to do now is I'm just going to look at this time frame right in here and say over the last 10 years. We'll just blow this, zoom out a little bit. Oh, no, I want to go zoom in a little bit. That's what I want to do. And here's what we're going to do. We're going to measure some Fibonacci numbers from these last highs. This high right here. Whoop, right at the 61% retracement. We're going to do the next one. Exactly at the 61% retracement. Now I got to move it over a little bit if I can remember how to do that. I think that's close enough. Well, I'll zoom out again. Let me see. Oh, I got that one messed up. Here's where we are right now. Let me, I got to get rid of this because I want to show you the importance of where this, since this is a weekly. Oh, this is a monthly. Let me go to the weekly. Makes it real easy. Here we go over here. Yeah, this is where we are right now. I got to get rid of this. Hold on a second. It'll only take me a second to get rid of this. Remember, I'm doing this from memory, folks, so bear with me here. All right, I'm just going to draw this in to show you where we are. And here's where we are. That low that we made right here at 11175, I think that was it, 111, whatever that low was, right there exactly at the 61% retracement last Friday or Thursday on the weekly chart was exactly 1.618. It was extremely important. So what we want to do is I want to show you this distance right here. What we're looking at is very similar to what happened right here. Remember, this is a weekly chart. And if you look at this bottom, you notice how we took out all these stops down here. The whole world got bearish. Well, the reason why that was a very bad mistake, because if you were to follow ABCD, there's your AB leg right here. And all you have to do this is to clone it. And you'll see that the CD leg comes in exactly at the bottom right here. And there's other swings that are in here also. So, and that's showing you that we are at a major bottom here in this euro, in my opinion. It's just got some really incredible things. If we go down to a 4-hour chart, we'll be able to see it just a little bit easier, I think. Move it over. Oh, we'll get in here just a second here. See, the trouble is when it's not my own software, but this stuff is so good, it's got everything in it. So just give me a second. Here we are. We're getting into March of, yeah, oh, here's the numbers that we've got drawn in. So that's, sorry, folks. Let me get this done here, and we'll be right here. What am I doing wrong here?
Hey, Larry, you can click that little red arrow that's under Tools. That will take you to
this one.
That one.
There's one. Yeah, there's it. Okay. Thank you very much. Okay, this is the 4-hour chart I'm looking at. I want to move this over. What I'm looking at here is this larger ABCD that occurred. You'll notice that the high that we made back here was almost exactly at a 61% retracement. You'll see that right in here it went, I think, 10 pips above it. And then, came down. And now what we're looking at now, this is good. The key here is where we are right now in the euro. We're trading at 129.43. And all we're going to do is we're going to zoom in, take a look at where we are. I got to go back to this thing again. Yeah, that's what I want to be. Okay, here's where we are right now. And what I'm looking for now is to see how the euro gets to the next fib level. There you go, from this high. You see that comes in right here at the 61. We're right at 50% right now. Okay, this is where we are. And here's what's happened so far. This is since March 7th. That was about a week ago. If you take the low that was made here, I'll just draw this in. This is what you have to learn to do yourself. You see the market went up, correct? Then made a correction, didn't it? So we know that it made some type of a correction. So all we want to do is let's just show you how this market repeats over and over again. Remember, this is a 4-hour chart, so you got a lot of information on this. So the market pulled back, and then it went up again, didn't it? Okay, the next time it pulled back, look what it did. I'll just move this over. I'm going to clone this, and you'll move this over, and you'll see that it did exactly the same thing. You see how it pulled back right to that level? And I was expecting it to do it one more time. I thought it would get down to this level, but we continue to go higher. And the reason why I think we're going to go higher is because of this move right here. If we take this, all we have to do is you'll be able to see that if you did this, there's your AB leg, there's your CD leg, and we're completing it right now. So any move here, I would love to see a move to come down right to this level right here. That would be equal to the move that you had right here, and then we'll start up again. If we go below this, everything I'm talking about here is full of baloney. It's not going to work. But right now, this thing is going higher. I mean, we've already rallied from 11176. We're at 130 pips higher already. And, that's the repetition that you see, all the time in these things. So, like I mentioned several times before, the market repeats over and over again. I'll do let's see if I can do that weekly one more time. No, I don't want to do that. I want to do the daily, I think. Yeah, move this daily over a little bit to show you these different patterns. Because here's where we are right now. We've completed the big ABCD to the downside. We took out all the stops right here, and now we're in the process of seeing where we're going. Folks, when we get above this level right here, we get above the 78% of this move, which is up another 100 pips, that is going to be one hell of a move. That thing is going to be, it's going to be really big. So watch this. Watch for pullbacks. That's the main thing. So far, since the 7th, we've only been able to back off 40 pips. I think that shows on the in this, move this over a little bit here. Here's where I get messed up. There we go. Yeah, see, all we've done since we bottomed down here on the 7th was make these small corrections. See, there they are right here. You'll be able to see them a little bit easier. You'll see the repetition of the market. There's the first correction. Okay, I believe that's around 40 pips. And the next one, got to move this over. And I'll just bring it over a little bit like this. There's that one. That was off by about a few pips. I'm looking for it to come right in there. That's what I really wanted to get down there, but it hasn't got there so far. But this is a very, very bullish chart, folks. That's really what I'm looking at. Well, I think that's a first hour. That's basically what I wanted to cover. Oh, I did want to mention the opening price a little bit here. The opening price is very important in Forex, and the opening price is the London Open. If you let's just get up here to let's do a 15-minute chart, and I think that's a 15-minute. And let's just get the opening of the day. Let's see where we are today here, because we've already opened in Europe, I believe. Yeah, we opened in Europe. Where'd we open it? 13th, is it 14th? I think it's over here, isn't it? Yeah, 13th is right here. Here's the opening price in the euro, and you can see we went above it, and then now we've went above it. If you're above the opening price, you should be bullish. If you're below the opening price, you should be bearish. Here you were below the opening price, and then it immediately reversed. But if you'll watch this will be a big help to you many, many times, because if you stay long above the opening price, you have a probability of winning better than 7 out of 10. If you're short below the opening price, the probability is 7 out of 10 that you'll be a winner on the short side. So watch that very, very closely. That's another one. That's it. But you'll see these, you can see these A, B, C, D patterns all the time at all different time frames. This happens to be a 15-minute, but you've got to learn how to draw the patterns. You take the lowest low, you go down to the next level, and then you just mark it up, but then move it over, and that tells you there's your high right up in this area right here, et cetera, et cetera. It happens all the time, so that's what we're watching right now. So let's keep a close eye on it right now. May I ask a question, Eddie? Can I ask a question? Can I quickly show my live chart?
Yeah, go for it.
I think I can show my. Okay, here's what I'm looking at right here, folks. Here's the. This is gold. This is live. This is what I've been waiting for. You can see here on gold here, this is the 1.618 expansion. This is when we hit the 1351 level. You notice on the downside right here, from this high to this low, there's exactly 1.618 right here. That's it. Here's the little cycles that we're looking at. We had the pullback, and we're looking, our target right here is around 1310. We're 1308 right now. We're back to the breakout to the downside. So that's the kind of thing that I'm looking at when I'm looking at live. So I'm going to turn well, I won't do any others because I think it's relatively, well, that's about it anyway. Yeah, there's about the same. This one my charts look like anyway. Okay, let's move. I will turn it over to you, and how's that? And we will do some of the automated stuff, and then keep questions going, folks. And then at the end, I'll pull up the other charts if you need, and we'll talk about some of these others. But that's the main thing that I wanted to cover today. To me, it's basically exactly what I do. There's nothing fancy here. No secret stuff, just a little hard work, probability. It's all based on probability, folks. You think you got certainty, you're in big trouble. Look at crude oil, how bullish it is. I mean, crude oil's got a tremendously bullish patterns in here. Look at this. This is just, there's your 3 drive to
Larry,
a top pattern.
I got mine back, sorry.
Good. No, go.
We
This is good. I want to watch the, okay, we're ready anytime. All I see is good. Practical trend lines. Yeah.
Okay, no worries. Hey, thanks for that. That was awesome. I mean, that was awesome. So we really appreciate it, and some good analysis on what you think is coming as well. I can definitely see what you're seeing there. So, mate, that was really cool. All right. Well, guys, thanks to Larry for that little section. We'll have Larry back for some questions a bit later. Well, what we want to show you now is that all those calculations that Larry's been doing, obviously Larry said he's been trading for, I think, was it 57 years, Larry?
Yes.
57 years. They didn't have all the stuff that they have today, did they?
Uh, when I first started trading, it was a ticker tape. I had a ticker tape that went into a wicker basket, and we didn't have charts until 1984, and that was on a desk. The desktops that first came out. We got started getting prices. I think we had like 30 or 40 commodities, and now I believe there's 280,000 different ways that you can trade, just using the futures markets. I mean,
Uh,
not stocks, just using the futures markets.
yeah,
So it's got too much stuff actually. I only look at about 12 things. I don't like to look at looking at the monitor all day, you're going to lose your butt. So I look at the monitor 4 or 5 times a day, especially when the limit minder goes off to tell me that we're in a zone to look at something, and that's what I'm trying to do here.
Excellent. Well, yeah, basically, as Larry's talking about, things change. So, all the work that Larry's done and, a lot of the manual analysis that Larry started with, well, basically we automate all those type of things. So all the patterns that Larry is looking for, they're all just different calculations. Those extensions that Larry is drawing and things like that, we can calculate all of them. And then what we do at TradeView is we actually calculate them and then we build them and then we automate them. So I thought I'd give you a little bit of a taste of some of the stuff that we do that is sort of pushing what Larry's doing to to the next level in terms of automation. So
Eddie, how do I get back into the webinar?
you're still there, except well your screen's not, but your voice is.
Oh, how can I see the screen?
I'm not sure. I might see if I can get Ali to jump on Skype if you want to mute yourself,
Okay.
and then Ali can probably jump on and ping you on Skype, see if he can explain for you. All right, cool.
Okay, because I would like to see it because I enjoy it. I mean,
Oh
it's very,
yeah,
very,
no worries.
yeah.
Give me 1 second. Hey Larry, I'll see if I can grab Ali. I think he's just doing something, but I'll see if I can get him to
Hey,
jump on. So
listen, go ahead, Eddie. Come on, let's not waste any
we'll
of the
get
folks' time.
we'll get you
Yeah,
back as soon as we can.
I'm not going to worry. Yeah, just go ahead and continue on as long
All
as they
good.
can see it.
No worries. Thanks, man. All right.
Yeah.
So basically, guys, as we were saying, so we've taken some of Larry's stuff and then automated it. So what we're going to do is we're going to build a harmonic pattern trading model using a tool that we've developed called EA Lab. Hang on 1 sec. All right. So what we've done is we've automated a harmonic pattern trading model. So let me give you a look at how we do it. The first thing that we do, a lot of people say to us, and we sort of touched on this early on in the webinars, they said, how on earth do I automate things like double tops, which we did in the first webinar? And then, people say, well, how would I automate one of the harmonic patterns that Larry uses? And there's many different ways that you can do it, but one way that we've done it is we've actually built our own pattern trading indicator. So let me give you a bit of a look at what it looks like. It's called the TVI for TradeView Investments Harmonics Indicator.
Kelly, can
This
he
is
hear us?
yeah, we can hear you, Larry. Do you want to put
Oh,
yourself on mute,
sorry.
Larry, and you can talk to Ali on Skype? All right. So live TV, ladies and gentlemen. So we've built our own harmonics indicator. So I'll show you what it looks like. All right. So that's the indicator there. And as you can see, those patterns that Larry was talking about and some of the geometry that Larry was talking about earlier, we've been able to automate that and get that to basically draw those levels in. Some things that the TradeView harmonics indicator can do is it's fully automated. So when the pattern occurs, it will automatically find those A, B, C, D style patterns for you according to what you're looking for. So the calculation is completely automatic. What it will do is it will give you a visual representation on the chart so you can actually see it draw on the charts. Although you don't need to automate, but you can. Will work across multiple time frames actually at the same time. So you can look at, or you can pull the data from different patterns on different time frames. And it will generate a signal that an EA can use, or an expert advisor can use, to actually place a trade. So sometimes when you have indicators for MT4, maybe you've seen these, they're not always built in a way that you can that generate a signal that EA can reference. So they might look great on the charts, but you can't actually use them to automate with. But with this indicator that we've built, you can actually reference it to trade from. So I was going to ask Larry, what we're looking at here and what when we're getting buy or sell signals, but he can't see what my screen. So this is a sell signal. So basically, what the indicator is going to do, it's going to draw the pattern that we're looking for, and then it's going to produce a signal. So it's going to produce a sell signal here. And then it's going to, you can use the EA to actually sell at that point. So you can use it manually on the chart, but we obviously automated, so we'll get that to take the trade by itself. So let's have a look at what it looks like to build a model like this in EA Lab. I'm just going to pull a few things up here on my screen. Basically, it looks like this. So this is EA Lab, which is a tool that we've developed, and what it does is it allows you to build your own automated systems. So I'm going to show you guys here what the model looks like. We've actually built this one before, and I'll sort of explain a little bit about how it works. So it's this one here. I built it earlier. I was going to build it tonight, but I think we might not get enough time. But basically, what we're doing is we're just saying if there's no orders open, what we're going to do is we're going to reference our TVI harmonics indicators, and these are the parameters that are in the indicators that we've set. And if we get these particular conditions, we have two types of conditions. We have condition number one for buy, condition number -1, which I'll show you for sell. If we get those conditions generated by the indicator, then what we're going to do is we're either going to buy or sell the markets. And in this example we're going to build tonight, we're just going to use a fixed point take profit and stop loss. Now the interesting thing was I used basically a 1-to-1 ratio for the take profit and stop loss, and I was running Larry through earlier and showing him some of the testing I did, and he said, look, usually the way that you start out, your first profit target is what you risk, which is basically 1-to-1. All right, and as it turned out, we did all types of different testing, and in general, around about that 1-to-1 ratio was actually what we found worked the best. So of course, the beauty of automation is you can actually test and you can find out what parameters are going to work best for your strategy. So again, this is EA Lab. It allows you to build any automated model, basically, that you can come up with. You can do all sorts of things like reference the MT4 indicators. You can reference your own custom indicators. You can build mathematical calculations and all sorts of stuff. So this is what we do on a day-to-day basis. One question about the indicator, does it repaint, says Charles. No, it doesn't repaint, but it will, if the signal is met multiple times, it will draw the next signal. So it's not repainting, it will keep the original signal, but it will also take the next signal as well. All right, so let's have another look. I'm just going to pull back up my MT4 charts. Basically, what we do with this, once we build this automated model, we can actually see the code here if you want to see it, if you're a programmer. If you're not a programmer, like I can't program, you don't need to worry about it. You simply just download it here and then install it in your MT4 platform. So we'll go and have a look at one that I've actually done earlier. So here's the model, and what I'm going to do first is I'm just going to run through a test on the indicator itself, and that's actually going to allow you to see when the conditions for the pattern are met, and it's going to let you see the indicator draw it. So that's doing the test is just going to save me from having to go through the charts and find some or find a live one, but they will get drawn in real time. So if I play this now, this is basically like a back test for the indicator. So actually, there you go. We've got one already. So it tells you what type of pattern it is there. So it says it's a complete butterfly and it's bearish. So here, we're actually going to sell. And if you've got some experience with building automated systems, you'll actually know what that signal looks like in terms of building the model. And we teach you guys that if you want to actually learn to automate with this stuff yourself. But basically, once this pattern's complete, it's going to generate a signal on this bar here, and it's going to tell your EA to sell. Okay, so that's what this indicator already does. So we'll go through, we'll see a couple more. We'll see if we can find some. And there we go. So we've got another pattern met here and then another one here. So these are basically those ABCDs that Larry was talking about. Can you hear me, Larry?
Yes, fine.
Yeah,
Yeah, great.
excellent. So with what you do, you were just drawing this stuff on manually before, correct?
Yes,
Yeah.
yes.
And these particular types of patterns, I mean, this is finding what type of pattern it is if the conditions are met, and then it's just drawing it on automatically. So,
Yeah.
you don't have to draw any of these patterns yourself. It's actually finding these patterns and drawing them automatically. And it will tell you what type of pattern it is, and it will also tell you what time frame it's on. So,
Well,
daily.
Eddie, there's one thing that's really important, and that's to let your folks know to not to take the losing trades.
Oh, yeah, we don't want to do
Okay,
that.
only take the winning trades.
We'll do our best.
Okay,
So,
good.
all right. So basically, this is how the indicator works. And then what we've done is we've built that into a model. So it's a very simple model to start with. And what you can do is you can do all sorts of, once you've actually got the indicator and you're starting to test things, you can build all sorts of different models. So our model is going to be very simple. And all we're going to do is here where we get the sell signal, we're going to sell. So unfortunately, Larry, I think this probably would have been a losing trade if we'd have sold here. And then we're going to see over time, has this strategy with this indicator got the potential to actually make any money? So what I'll do is I'll stop the indicator test and I'll actually run through an EA test. So this is the model. So now remember, this is the model that we built here in EA Lab. And all we're telling the model to do is we're saying if we get a buy signal, then buy. If we get a sell signal, then sell. We've got a fixed take profit and stop loss. Okay, and it's around about a 1-to-1 ratio. So I'll run that now on the EA. We can see what that looks like. Okay, oh, I missed that one. Okay, so we wait. Oh, it's too fast for me. One sec. I'll see if I can get one where we can actually pause it. Oh, I'm just a bit too slow, aren't I? Maybe I'll slow it down a little bit. Alright, so basically you can see there where it's sort of flashing up, it's actually placing the buy or sell trade. Let's have a look. See if we can, there we go. Okay, great, fantastic. Alright, so we're getting the pattern met here, and then here we're placing a buy trade at the close of this bar. And we're setting our stop loss and take profit here. So all this stuff is going to happen automatically. We had a good question in there. Okay, so a couple of good questions. So Charles says the profit and loss targets are fixed, not related to the size of the patterns. In this case, when we built the EA, Charles, they're actually fixed just to make it a really simple demonstration. But of course, you could relate them to the size of the patterns. And Stephen asks, are the indicator ABCD points exact fib numbers, or is there a percentage tolerance allowed? We have actually allowed in the indicator for you to set a percentage tolerance. So you could make them exact, or you could give them a tolerance if you wanted to do that as well. So you can see here, that's going to set the profit and loss target, and then it's just going to keep on placing the trades whenever the conditions met. So I think you said before, Larry, you don't love sitting in front of the screen. Is that right?
That's correct.
I don't like sitting in front of the screen. So we trade over 50 models here at TradeView, including ones like this. And, we don't really have to sit in front of the screen and watch each trade, although we do basically monitor the overall performance of all the models. So what I'm going to do now is we can see how it does place the trades. I think you guys kind of get the idea of that. I'm just going to skip it through to the end, and we can actually have a look.
This is really amazing stuff, folks. I mean,
this is pretty cool, huh? So this is
yeah, it really is.
This is over time, and literally all we're doing is we're buying when we get the buy signal as per the pattern, and selling when we get the sell signal as per the pattern. And we're setting a profit target and stop loss of approximately 1-to-1. It's very, very close to 1-to-1. So, what do you think, Larry?
Looks pretty good.
Pretty cool.
Yeah,
so I've
sure
got a
is.
few questions. What time frame does it perform best on? What I found when I was doing the testing today is that it tended to work better on the higher time frames. What do you find, Larry, with yours? Do you find it works better on higher time frames?
Well, I when I look at a chart, I start with a 4-hour chart, and then I go down to an hourly, 30-minute, then 15, and then I enter usually around a 5-minute chime frame, to get me the best possible entry that I can. But again, I'm doing it manually. I'm not doing it automatically. Your EA expert advisor, certainly probably does a better job than I do, but I'm doing it
Well, you've got to sleep, Larry.
by
I know you
hand.
don't sleep much, but
Excuse me?
I said you got to sleep. The computer doesn't need to sleep. I mean, I know you don't sleep much, but
Uh, I guess so. What is sleep? Does that mean something? Sleeping? That's
yeah,
very overrated. It's very overrated, isn't
uh,
it?
yeah,
Yeah, Eddie, I have never been a sleeper. I used to be an altar boy when I was a kid in Catholic school, and I used to wake the priests up at 5:30 in the morning. And even when I was a little toddler, my mom said I would play in the crib by myself. I've always been that way. I never sleep more than 4 hours a night.
you are always up pretty late. So yeah, well, I mean, there's the
Yeah,
4 hours where you're sleeping, and this thing's going to place a trade.
yeah.
So it's difficult to beat that. I'll show you one other one, guys. Actually, I'll show you this on gold. And actually, Larry made a joke. Don't take any losing trades. I just want to show you this one that I tested as well. And I'm not going to say that this is going to happen every time. And this was just probably pure luck. But what it did show me, because this type of trading, I use things that are similar to this, but I've never personally done this harmonic pattern trading to the level that Larry does. So this got me really excited today when I ran a test. And I kid you not, 1-to-1 type ratio as well on gold. And I'm just going to load it up here. Give me 1 sec. And this was the result I got. So I kid you not, I usually don't show this sort of thing, and I'm not saying this is going to happen all the time, but take a look at this one. If I run it through, I think I showed Larry this one earlier, but I think he was joking before about no losing trades. I'm not kidding. So I'm not making this up, guys. I mean, look, probably it was just lucky that we had a good string of winning trades. But, I mean, it definitely got me a bit more interested in some of the stuff that Larry's doing. So,
Well, if you can do 60%, you'll make money.
exactly. So,
Yeah.
at a 1-to-1. So, I mean, this is, it's definitely something I'm going to play with, around with a little bit more. So, like I said, that was a 1-to-1 with a fixed profit and stop loss. So, this is basically how we build, guys, to give you a bit of an idea. So, the process is, we come up with an idea, which in this case would be the pattern. We build it in EA Lab, which we showed before, which is this tool here. And you don't need any programming skills or anything to build in EA Lab. Then what we do is we test it, and then we actually pull it into another tool of ours called EA Analyzer. And you can see here I just built up a little portfolio of some of those products that we tested. So in the portfolio we had here the pound, we had gold, dollar CAD, and we had the DAX as well, which was the first one that I ran it on. And we simulated this on a $10,000 account, and over the time that we ran it from, we returned there, this is in testing obviously, ran about 35% with about 6% drawdown. So without putting in, a lot of we didn't really play around. We've just got it's a very simple model. We're definitely able to, it looks like we can generate some really good results, and we can definitely play around with that a bit more. So that's just to give you an idea. That's what we would do next as an automated firm, is we take those results, we put them into EA Analyzer, we do some further analysis, and we build up a portfolio of them, and we see what that will look like, just to give you a bit of an idea of what you can do once you're automated. Okay. Now, let me just pop up my screen. Now, the great news for you guys is you guys can get the TBI harmonics indicator. So let me know if you would like the indicator. We said to IC Markets that we do 250, but I tell you what, if we get more than 250, I mean, this one basically is courtesy of IC Markets as well. So we built it, but they're the ones that are making it available for you guys. I might have to ask IC if we can give away a few more than 250, because like I said, we had 1,000 registrations. So I'll see what I can do. We've even got a few emojis in there. We've got the praying hands. All right. A lot of people there want it. All right. Fantastic. All right. Well, look, I'll tell you what. I'll see what we can do. What you guys need to do if you want it, you need to register to receive it via a form. So I'm just going to give you a link now. We're going to put in the chat. Give me 1 sec. So, guys, let me know, please, if you get this link. It's just a Google form, so it's just going to ask for... let me send it here. Okay, did you guys get that link? Just let me know. So what we're going to do is you need to put in your name, phone number, and email, and then we're going to call to confirm that you're a real person. So you need to give us your correct details, and then one of the traders, what they'll do is they'll actually show you how to set it up, and we'll probably give you some documentation as well on what you need to do. So when you fill out the form, make sure you put your correct details, and then we'll sort that out for you. All right, we've got a few people here saying they can't access it. What I'm going to do is I'm just going to see if I can get one of the guys here to fix it. Give me 1 second. Okay, guys, sorry about that. It's because I think we've made it available to people internal at TradeView only. So let me fix that. I will fix it by the end of the webinar. Bear with me. I'll send it again. Sorry about that. But basically, what you're going to need to do, register via the form. It's going to ask for your name, email, and phone number. And you need to give the correct details because we'll contact you and email you the indicator, and we'll show you how to set it up as well. So there you go. Our traders will contact you to give you the indicator and instructions. Also, I just thought I'd show you guys that you guys can also build models, because if you get the indicator, you can use it and you can put it on your charts and everything, and you'll get to see the patterns get drawn, but really you won't be able to automate with them. Okay, so in order to automate, you need to be able to build your own automated system. So you need to get access to EA Lab that we use here. If you want to access EA Lab, because you're all IC Markets clients, this is what you need to do. So basically, log in to your trading account, and then under Profile, you'll see a tab basically, or you see a menu item called Request EA Lab. And if you click on that, what it's going to do is it's going to let you obviously request EA Lab. EA Lab is free if you meet the minimum trading requirements, or otherwise it's $69.90 per month, and you're not locked into any contracts. So if you want to get the indicator, you can also get access to EA Lab through your IC Markets account, either free if you meet the minimum trading requirements, or $69.90 per month. And you can start building your own automated models like the one we did tonight. So that's that there. Guys, can you just try the link for me again now? I think we might have fixed that. So if I just get you guys to do it again. Also, what you need to do is you need to copy it and paste it outside the chat in a browser. It won't open in the chat itself. So do one of you guys mind trying for me? All right, a couple people said still not working. Okay. What I'm going to do, I'm going to actually pass it back over to Larry to answer some questions for you guys. And while Larry's answering some questions, I'm going to fix that for you guys. Sorry about that. I've made a bit too many permissions. Hey, Larry, you're still there?
Yep.
Excellent.
Yeah, sure.
What I'll do, I'll take some questions. So I'll read the questions out. So guys, if you want to post the questions to me, I'll ask them of Larry. And Larry, I think we won't show any more live charts if that's okay. We'll just do the demo ones, if that's cool. If you want to show any charts.
No, we can do whatever they like, and let's answer some questions. I think that'd be the easiest thing to do.
All right, no worries. All right, what I'll do, I'm going to put it over to your screen now. So if you want to bring your IC Markets platform back up again, and you can do any demos on that stuff, and then I'll ask the questions here. So I'm going to. Are you ready for me to switch you back over?
Yeah, it's good.
All right. So bringing back Larry's screen.
This out of the way here. Hold on a second here.
All right, excellent.
Okay.
All right, I'll let Larry play around with that. Guys, if you want to keep trying that link and someone want to let me know if you can get it working, I'll let everyone know.
Okay, you're going to tell me what the questions are, of course.
All right, here we go. Okay. How far away from a fib level do you place your stop on a harmonic pattern buy or sell? From Mark.
It's a dollar amount, Mark. I usually use most of the trades we do are like 40 pips in the currencies. That's roughly $400. The larger ones, of course, we have $8 in gold because that's a $125,000 contract. And of course, the S&Ps are usually 7 points, $350. Crude oil, usually 80 pips. That's $800 because it has so much volatility. But almost everything else is around $400.
All right, thanks for that, Larry. Hey, by the way, guys, everyone's saying that the link works now, so you can access that link now, and the form should be working. Sorry about that. Yeah, so guys, make sure you put the correct details, otherwise you won't be able to get the indicator. So you put correct phone number and email, okay, so we can contact you. All right, okay, more questions here for Larry. So we'll keep these questions going now. I think we've sorted everything out from our end. Alexander was actually asking a few before. What is the real physical, he says, reason that the patterns work?
Which the hell I knew? I don't know. Honest to God, I don't. I've looked. I do some work in astrology. That's only a little part of the answer, but it's all natural numbers in the universe. I mean, they starts with that Fibonacci spiral, and it's just everywhere. I mean, it's just everywhere in the universe. I don't know the answer. I wish I did. Don't really care. I actually don't really care, Alexander.
That's it. I'm with you on that one.
Yeah.
Okay, so we've got another question here. Just a quick one here. Someone doesn't have the EA Lab link on their profile. You need to have a live account with a minimum amount in it. It is only a small minimum amount, so just make sure what you put in. I think it's $200, then you can get access to EA Lab. Okay, so some more questions. Does harmonics work on the VIX?
Works on anything that's active and liquid. It works on anything. Doesn't penny stocks doesn't make it as long as it's active and you have liquidity. It's going to work on everything. It's just natural law. I mean, the market can only do three things: up, down, and sideways. That's the simple thing you have to look at. And what you're trying to do is find the best spot along that line there that gives you a risk-reward opportunity. That's really what you're looking for.
Excellent. Hey, Simon.
It works on everything.
Excellent. Hey, Simon, I won't read that one out, but if you want to contact me, I'll give you my details later and I can organise that for you. Okay. Do you use any time frame analysis?
Yes, I do simple stuff. I'm just looking for equal time from high to low, high to low. You see that repetition over and over again, but that's all I'm looking at. I'm just simple. I keep it as simple as possible. In other words, if there's 13 bars up, I look for 13 bars down. If it's 13 bars from high to high, I look for 13 bars high to high. And it doesn't even have to be 13. It could be 9, 17, 22. It doesn't make any difference. But if I see repetition, what I'm looking for is repetition because I know it's going to repeat. Just a question of finding it.
That's it. We look at stuff, Larry, we look at some similar things. It's really interesting with trading. I think, the one thing that's important is to be systematic. And what Larry's doing, guys, is he has a particular system that he follows because a lot of those things he's talking about we look at as well. Mm-hmm. Even though it's not necessarily exactly the same, there's some similar elements in there. So I think, among people who know how to do it, there's definitely some similar things. So, all right. Okay. Hey, Larry, we might keep to the other account if that's okay.
Oh yeah. I want to check or see where gold was.
No worries.
If you're gonna make me work all night, I want to make sure I'm getting out of my position. I've been long gold. I just got out at 1308.
Pull it up on here. Pull it up on here. Go. By the way, I've got I think about 13. So see where it gets to. Go. If you want to pull up gold in here, so I know a few people watching. No, pull up. Pull it up. Pull it up. If I go file.
File. Okay.
Yeah, and then new chart, and then metals.
Yeah.
And then gold XAU USD.
Right here.
Go down. Go gold versus dollar. One more. Yeah.
Right here?
Yep.
Okay. Oh, that's good enough. Yeah. Sure.
Where are we at? 1308 point something. All right. Cool. Hey Larry, if you were to draw,
Yes.
actually, why don't we do this? Here's a question from me. If you were
Yep.
to, if you were to look at your patterns on gold, where are we heading with gold?
I believe this is a major top that we made up in here. I really do because you can see, well, you can just see the ABCD pattern that we have. There's your AB leg. Hopefully I get that right. There we
There you
go.
go.
And there's your ABCD leg. You miss it by a little bit, but if you looked at the time from your low to your high and low to your high, you're right up in this area right here. And then also, if you were to do this is a this is a daily. If you did the weekly, you would see that you had gone up to a 7. You went. And the reason why it went above the 78% level is because it was the rollover of the market from February to April. See, the actual high should have been right around here, but because of that switchover, that's what pushed that up, in my opinion. But this is really important where we are right now. I mean, this is
Look at that.
it's really
There's your
important.
61, Larry.
Yeah, well,
Mate.
the more important, where we are with gold, and this is, you still got a chance for really bullish gold, and the reason for that chance is right here, from your low to your high. You see it came almost exactly to the 382 retracement, and this is two harmonic numbers down. The harmonic number in gold is 34. 2 times 34 is 68. That drop was 68 right at the 382. That's why any movement here above this 1310 level, whatever it happens to be, or 1313, if it gets above that, it could really go.
Could go
That's
for it. Well, it's definitely going
what we'll
tonight.
see.
So, all right,
Yeah,
excellent. Let me ask some more questions from here. Sorry, guys.
sure.
Okay. Just any of the ones about the indicator, guys. If you hang around till the end, I'll answer for you. I'll keep these questions for Larry, but you're welcome to post them. Okay, here we go. How many charts do you concentrate on? Says Raymond.
I have about 12 in my portfolio. My main ones, of course, are the euro, and I'm really looking at the pound. The pound has really been good these last few days. I mean, it's had 300 and 400 point swings right at perfect numbers. I trade the euro every day. I trade the pound 4 days a week. I trade the S&P every day. Trade gold every day. Not every day, but I mean, I usually have at the very most 3 trades a day. That's the most. Today I had 3. Had 2 winners, 1 loser, and that's I usually have 3 at the most. Sometimes when I'm really rocking and rolling, maybe a little bit more, but I really don't like to look at the machine anymore. I've looked at it too much over too many years, and it's fun occasionally. I like doing this because there's going to be a few people out there that's going to resonate with somebody. I don't know who it is out there, but there's going to be a few people that says, no, really? Is that what it's doing? You know, and then they're going to go back and defy human nature and do the work themselves and prove it that this stuff actually works. It's going to change their life forever.
Well, I tell you what, judging by the questions and the comments here, I think we've definitely got a few people who are very, very interested,
Yeah,
which is great.
if you get more than 3, I'll be shocked.
I think many more than 3. I'm going to keep going. We can still go for about half an hour, so we've got plenty of time.
Oh yeah, we got plenty of time. Don't worry.
Larry, do you use VSA Wyckoff tape reading as well for extra confirmations? Asks Mark.
No, I don't. I've done a lot of, I like Wyckoff because it's based on wave analysis and stuff, but no, I don't do any oscillators at all. No RSR, MACD. Those are lagging indicators, and pattern recognition is a leading indicator. It doesn't work all the time, but it works some of the time, and that's what I'm looking at. I'm looking at the probabilities, in my favor.
Excellent. All right, I've got one here from Benny. Benny's a good client of ours, actually, Larry, so be nice to him. How can I use the theory to describe Elliott wave?
Elliott wave is okay. Now, I started looking at Elliott wave long before Prechter did. I started watching it in 1968, and the problem was I had a really hard time identifying, these 3s and 5s and 2s and 4s and stuff like that. And basically, I came to the conclusion that, if I have ABCD, that's really all I really need to do. And then I look at the ratios of the Fibonacci sequence, and I'm looking at those numbers: 618, 786, 1.27, 1.618. And when I have multiple ratios coming together, that's what I'm really really looking at.
Okay.
I keep it simple. I just, hey, look, I had a trading house up in California, Pismo Beach, and I had the best Elliott guys in the world. I had Plummer from the UK there. I had Glenn Neely come up there. Bryce Gilmore lived there 3 months a year for 5 years, and he's as good as it gets. Bob Miner was there a lot, and the problem is it's sit there and be arguing whether it's a 2 or a 3, and I'm over there trading it, making money, and I don't really care what the wave structure is. I'm looking at, if I get to this point, how much, it's like looking at that slot machine. When I look at that slot machine, how much do I have to see put in this thing to see if I'm right? That's what I want to see.
Keep it simple. I like it.
Yep.
All right. So Ole says, is the best idea then to enter at the 0.618, meaning it will turn there?
Ollie, the best way is to look at the pattern itself. There are two parts of this. First is the pattern, and the second are the ratios related to it. The ratios have precedence over the pattern because mathematics have preference over geometry. That's not just from me. That's from Pythagoras and also from Einstein. Some of the really smart dudes. So you look at the ratios first. Those are the main things. What you're looking for is you're looking for multiple confirmations, not just 618. You want to be able to look at that and say, where did that 618 number come from? Which swing did it come from? And that's where, the Elliott guys would say, well, that's a 3 of a 5 or a 2 of a 4, whatever it is. But I'm not looking at that. I just want to see what that ratio happens to be. Look at the high. As we're watching gold right here. If you just did this ratio right here from this low, from this high to this low, expand that out. The 1.618 expansion is right there. So it shouldn't get any higher than that. If it does, then who knows where it's going to go.
I reckon this is pretty cool, Larry, by the way. This is actually some really good live trading. People always ask for live trading, and because we're automated.
Oh, I love live trading. I could do that all day. I could do that all day. I love that. In fact, one of the fun things of doing this, and I don't get to do it very much because I'm 78 now, so I keep my traveling down. We're heading to Hong Kong. We'll see you guys there. I'll be there for a few weeks, and then we're home, and then we go to Philadelphia for 3 months. We got a new baby coming, a new grandson. But, we keep our traveling to a minimum, and I don't get to trade live like I used to, but I enjoy it because it makes people look and say, oh, gee whiz, that wasn't that hard. I can do that.
I think, well, I mean, I'm really enjoying watching this. Hey, one thing that you mentioned that I forgot to mention, I don't know how I forgot, but we're going to be in Hong Kong presenting something similar to this with Larry. I know a couple of the guys, actually Benny, who asked the question, is going to be there, so you'll get to meet Benny in person. Benny will get to meet Larry. And it's going to be on, what's the date, Larry, for the guys?
We do a small one on the 21st. It's a 3.5-hour one, and then we're going to do the all-day workshop is on the 23rd.
All right.
March. Those are the ones in Hong Kong, and then I go to Shanghai after that, but that's just a one-day deal.
So for all you guys in Hong Kong, if you want to see Larry and Rob from TradeView, then let us know. Just ping us. I'll put my details at the end, and you guys can, we can maybe organise a ticket for you. So let us know if you want to go see Larry and TradeView in Hong Kong. All right, some more questions here. Stefan says, do lower timeframes work better if you limit the trading hours to when they're most liquid?
Yeah, well, I don't trade in the middle of the night like I am right now, but usually my day starts around 4 in the morning, Arizona time, and I'm done by 10 o'clock. And that means that there's about 3 hours to go in the New York market, and then I'll check what Asia's doing because I got clients that depend on, some of the things I look at. So I talk to those folks. And then, but that's pretty much it. I used to enjoy looking at the charts because I was learning them, but now, I mean, all this stuff is old to me, and no one's showing me anything new in 10 years. So, that I'm sure there's new stuff out there, but I haven't seen it. Believe me, people present a lot of stuff to me, but basically the markets go up, down, or sideways. That's what they do. Yeah, and then you say, okay, what ratio is it? How long did it take to get there? What's the, how many days up was it? How many days down was it? Where's the repetition? When I find repetition and multiple numbers coming together, like I'm seeing here in the gold at 1308, I got to pay attention to that.
Agreed. Out of curiosity, what's the top of that level there on that?
On the red part?
Yeah.
Oh, that comes in around 13,
10,
13,
50.
10, I think 13.10. Yeah.
Okay, all right. So, guys, keep an eye on that. So we'll see what happens. Either it's really going to break through there, or we're going to bounce off that. Agreed, Larry?
Yeah. Yes, I think so.
Yep. All right. Let's keep an eye on that, guys. All right. So, do you wait for a level? This is from Charles. Do you wait for a level to prove itself, or enter with a pending order?
I just have the order setting there. The only way that I won't to enter is if there's a wide gap. Like some of these crazy stocks gap a lot. The futures, Forex doesn't gap, but you'll get futures gap occasionally. But the gaps scare the heck out of me because I don't know what's happening. And if you have these really wide-ranging bars, like on this particular chart, you don't have any, but on some days, you'll get a really wide-ranging bar. Like we had at the bottom in the Australian dollar when the Japanese did the bank robbery. That's a wide-ranging bar. I've got to wait to see what happens after that because that's a big unknown to me. Gaps and wide-ranging bars are unknown. They represent more risk. They also represent opportunity, but I want to be able to to find where I am before I move forward. So gaps and wide-ranging bars are very, very scary. You don't want to buy into what we call the falling knife or try to catch a shooting star or something like that. It's better to let the market make a doji or couple. The tweezers are the best because then you have some really great spots to tell you there's supply and demand coming in.
All right, excellent. Do you use one from Hussein? Do you trade the exact close of the pattern, or you'd rather put an order at the top or bottom of the next candle?
No, I put it right at when like on this one here, 1308 was my number, as you remember, and that's where I exited the long and went short, and then my stop is $5 away, so my stop will be at right above 1313.
13. All right, fantastic. That's one to keep an eye on, guys. All right, we might have answered this one, but how much time? This is from Tanviral. How much time do you spend behind the charts daily?
How much time? Off and on, probably. So I do a radio show every day from 9 to 10 in New York time, and I answer some questions like we're doing here, go
Is
over
it?
some stuff.
Is it? I haven't heard your show, Larry. Is it a trading radio show?
Yeah, it's a trade. It's www dot TFNN Tiger Financial News Network. It's between 9 and 10 every day. We talk about the U.S. markets, the DAX, Hang Seng, stuff like that. Answer questions. A lot of smart guys in there too. They have a trading den and they got some smart dudes like you guys, Eddie. They're not as good as you, but there's some really good guys in there. They're really smart,
Well, thanks, man.
and they share their ideas. That's
we've had you on the live TV on the Friday that we do here as well. So we'll have to get you back for another one, I think.
okay. Any other questions?
I've got plenty of questions. I told you we got plenty of questions. Wayne asks, okay. Larry, this is a great question. Wayne must be a professional interviewer. Larry, if you had to pick a single fib number to trade, which one would it be and why?
Oh, that's an easy question, Bubba. But if I told you, I'd have to kill you. It's real simple, Wayne. If you remember the second chart that we showed, the spiral Mirabilis with the top of the pyramid and the chambered nautilus, that end of that chambered nautilus is 1.618. And that's what you see, that little white line that's up there on that gold right there, that's 1.618 right there. So if we get much above that, that tells me that I'm wrong. 1.618 is it's etched in stone. I mean, those are the easiest trades. Gets beyond that, stand aside. You don't know where it's going.
And that's it. But like you said, Larry, remember we were talking before about leaving some on the table. I mean, if you're in,
everybody loses. Yeah, everybody loses. Yeah.
No problem. All right. This one here. What percentage tolerance for the ratios does Larry allow? From Martin.
Usually around 3% at the very most.
Okay, there you go. Simple, Martin.
Yeah.
All right. Okay, let me have a look. Okay. How many Fibonacci ratios can you have on a chart at any one time? That's from James.
Too damn many. That's why I only use the 618 and 786 are retracement numbers, and 1.27, 618 are expansion numbers. Some people use 0.88, some people use 0.84, some people use 382 is a good one because that's a real that tells you when a trend is changing. 50% is okay, but for 50% is a static number. It's neither higher nor lower, and the markets are either always expanding or contracting, aren't they? So I don't use 50% very often. I do use 50% when you have a beautiful ABCD coming in at the exact same time. That means a great deal to me when the ABCD and the 15% come in. But other than that, I'm basically looking at those four ratios. I get by with those four, and there's a lot more. I have students that use 8, 10, 15 different ones, but the charts get too cluttered, and my old eyes, you know, uh, I just got to be,
Got to keep
I
it.
want to keep it as simple as possible, really.
Yeah, we agree. Keep it simple. This one's from Josie. Josie's a good client of ours as well. He says, "Hi Larry, do you check out the fundamentals as well?"
I used to have a parrot. And I read the Wall Street Journal for many years because I used the Wall Street Journal to take care of the bottom of the parrot's cage. But when after the parrot passed away, I stopped looking at fundamentals. Fundamentals is such a bunch of BS. I mean, come on, guys. Look at this chart. It's a sum total of all the buyers and sellers that are going on in gold right now. The fundamentals don't mean a goddamn. Sorry, they don't mean a. That's 3 o'clock in the morning. They don't mean a darn. They don't mean a darn thing. They really don't. Fundamentals is all BS. The prices are following what the fundamentals are doing. The prices have to be the most bullish at the top and the most bearish at the bottom. That's what they have to be. And that's all you have to know.
You know what, Larry? I think you actually answered that better than I've been able to answer it for people, because people say to us all the time, with automated trading, but what about the fundamentals? But
The fundamentals are in that chart right there.
they're already in there, aren't they? They say the same thing about, we do a back test, and people always
Yeah.
ask, but what about an event, a particular event?
Oh,
And I was like,
that's
but that was
different.
in there.
Yeah, yeah, it will be in there. But you don't have any. You don't have any control over those events.
Correct. So,
You really don't. So I was. This is the one thing. If you do pattern recognition, the fundamentals will go out the window so fast. You say, "My God, why did I ever read a paper?"
that's it. Well, if you've got a parrot, you can do it. Larry didn't use it for the bottom of your
Yeah,
parrot's
yeah,
cage.
he was a great parrot.
Right. All right, let's have a look here. I'll just have to read these. Okay. All right, and we might have sort of answered this one, but it might be a bit different, so I'll ask it anyways from Andy. Question for Larry. Do you always wait for pattern completion to trade, or do you trade every trade to the predicted level? Do you trade the CD leg or wait for the D to complete?
That's a very good question, and the answer to that is at point C. If point C comes out very, very strong, in other words, this particular one, as you'll notice on the gold, when it was down at the 1290, 1289 level, it came out very, very quietly. But if it had came out here really, really strong, I would have probably added one or two contracts to see it go higher, because point C tells you how it's going to move. If it gaps out of point C to the upside or is really, really strong, that tells you where you're going to go. But usually I'm waiting for the completion of the pattern, and that's the ideal situation that I wanted to see.
All right. Somebody says they've been to Hong Kong in 1996. All right, fantastic. Or maybe
I've
they can
been
come
going
back.
there since 1976.
All right.
In fact, I married a beautiful Chinese girl named Sarah who could trade the socks off anybody that I know, and we go there quite a bit because we have a place there. But I do love Hong Kong very much. It's one of the most, and it's so inexpensive, except for if you want to buy real estate. The hotels are cheap, the food is cheap, the transportation is dirt cheap, and really nice people, and it's a great fun. And we have so much fun all the time that we're there. We have a big contingent of students there, and also in China that come to visit us, and it's a fun day for sure, and we really enjoy it very much.
There you go. So, guys, if you are in Hong Kong, you know Larry loves Hong Kong, and Larry and us are going to be there in March.
Fact is, it's the end of the Excelsior Hotel. It's 47 years, and it ends at the end of March, and they're going to turn it into a luxury. What do you call these? Luxury efficiency apartments for people, like more or less long-term hotel type stuff. So.
Yeah, so get in while you can, guys. All right. Okay, got a few more questions here. Let's have a look. Someone said, "Are you going to be in the UK anytime soon?" Wayne asks.
In the fall, it looks like well, we've got so many dear friends over there, especially in London and Isle of Man and Ireland and Scotland, Denmark, all those places. But we usually go to Denmark and London, UK during the fall. That's usually what we'll hit those. Denmark, Sweden, and then UK, and then occasionally we hit Italy. Of course, we got a lot of students in Italy.
All right, excellent. Then we've got time for a few more questions probably here. So one's from another one from Benny, who's going to come and see you. It says, if I want to enter multiple positions, what's the best trade management technique to enter trades?
Multiple positions. I mean, does he want a pyramid? Is that what he wants to do? Or is he just, I mean, I don't understand what he means by multiple positions. I trade in units. So my first unit is my buy point. My second unit is where I think is going to be a low risk entry for the second unit. But what does he mean by multiples? I mean, does he want to add on the way up or?
You know what? I don't know. So I reckon Benny can ask you that one in person in Hong Kong.
Yeah. Please do. Yeah, tell him to bring his Platinum Express card. I won't charge him.
he can hear you.
Yeah, I figured he could. Tell him to bring it. No, it's okay.
Okay. Oh, good. All right. Let's have a look. We've got a couple of questions there from Gary and Paul. Guys, if you field those to me, I'll talk to Larry about them offline and come back to you. All right. Let's have a look. Okay. Let me have a look. I reckon I could probably do maybe 3 more questions or 4 more questions. We'll see how we go.
Yeah,
all right.
Take your time.
Okay. Does he wait for a price rejection zone? Or just trade the pattern as soon as it presents itself? From Hussein.
This particular gold chart is exactly what I was looking for. Remember when you looked at mine, there was a little red box there. The middle of that red box was 1308, and that's where the price objective was. So I'm willing to reverse from long to short. I'm willing to take the risk up there right around above 1313. And, that's all I'm looking at. See, there's no wide-ranging bar up here. There's no gaps. The market's very, very normal. And if you look at the low that we made back on March 7th, you see how many bars we went up. If you look at the low we made back on March 11th, you see how many bars were up here. Let's just see, we went up from the 7th to the 8th, and here we are from the 11th to the 13th. So it's doing pretty much what it's supposed to be doing.
Pretty much what you thought. Hey, a quick question for you. When did that level that you came up with there, that 1308, at what point did you come up with that?
Right here.
Perfect.
Yeah, right there. See, the ideal situation didn't hit my buy price, so I had to chase it a little bit. But you see, it hit exactly 50%. I wanted to buy it here. That distance here was $2, and we didn't get there. So right there is when I knew I better try it. So that's where I entered, and now I'm out. So
fantastic. All right, I've got a few more questions here. I can't ask all the questions. All right. Let me try and find some. There's a lot of questions, guys, so I'm probably not going to get to all of them. Okay.
Well, I've got time. If you've got the time, Edward, I can help you. So
I reckon we can go.
I'm certainly not going to. Go ahead.
I think the webinar actually shuts itself down after a little while, so we can probably go a little bit.
It does? Okay.
Yeah.
Okay.
So look. All right, I don't know if we've answered this one. Do you look to enter at C point of an assumed ABCD pattern, and what would be at the 0.618 level? And would that be at the 0.618 level?
Yes, that's a good thing to do, especially when the trend is up. If you look at the British pound, let's just do that real quickly. I think we can. How do I get to the British pound? Do I just go to charts?
Go file.
File, okay, file, okay.
Yep. And then
New
go to
chart,
new
new
chart. Yep.
chart.
And then third
Here's
one down.
British pound.
Gotcha.
Okay, here's a perfect example. Let's just move to the 4 hour. Okay, here's a perfect example of the British pound. You'll see the level that we had right down here. That was right at a 61% retracement. The market went up. Let me zoom this out a little bit here. One more time, and that'll tell us where we are. Okay, here, perfect example. Yesterday, you'll see the market it completed the ABCD pattern. Look at this beautiful pattern that we had right here. We covered this here on the opening Sunday night. There's the gap opening on Sunday night, setting right at the 61% retracement. Okay, there you'll see it. There it is right there. There's the opening Sunday night. Went up to the 78% level, came down to the 78%. We made 330 pips on this one, 240 pips on this one, and 200 pips on this one in 2 days. I mean, you don't get that kind of volatility in the pound. So that's yeah. Well, the pound has made a major, major bottom, folks. This down here, this 78% level was that is a major, major bottom in the pound, and I think they've turned things around there. You'll see it. There's the 78 level. This was one of those. That was the bank day where the took out this low by about 30 pips. This was the December 26th when Japan did their funny stuff. So that's neither here nor there. So.
All right. Excellent. What else have we got in there? Someone really loved your fundamentals answer. It was Wayne. Wayne's been pretty active tonight.
Well, that's good. Let me show you one other here that was really big for us here. If you'll notice, this was right here. Remember, this was Brexit?
Yeah.
Okay, look at this. Where is it? This is off by, I don't know if this is right. It actually hit it at 150 and change was the exact 61% return. I don't think this chart's right, but it's showing very close. Anyway, that was Brexit, and down it went. But anyway, that's near the pound. So let's get back to where we were with the gold.
All right. Question here.
File, new chart. Go to gold and metals. Let me see if I can do this myself. There we go. There we go. And we'll just go down to say a 30-minute and see where we are.
Hey,
we're still there. Okay.
While you're doing, we go 13:09 now. All right, wow, pumping. Someone here, Greg says, I'll just read this one out, some feedback for you, Larry. He says, can I say we're lucky to hear Larry tonight? What a wealth of experience. Thanks, boys. So,
well, thanks.
There you go. No worries. Thanks, Greg. We appreciate that. Hussein asks, Hussein's been very active here. What's his question? On the gold chart right there, at what point is A?
Right here.
If you go back to gold, we're still on gold. Yeah, cool.
Here, just blow this up and see it a little better. Yeah, here's A right here. See, there's A, B, C, D.
There you go. Very simple, Hussein. Okay, what else have we got here? From Veris, what is the ratio of maximum extension of CD leg?
Of the CD leg, 1.618. In other words, if you took this distance by 1, the maximum this can go is 1.618 of this. This is advanced stuff, of course, and we do watch that because if the market is screaming, this isn't screaming, this is a normal market, but if it starts to scream, it will most probably go a little bit higher. That's what we're watching.
There you go. Okay. Oh, there you go, from Greg. I think maybe that's what you're sort of talking about here. Is the C on gold 1.618?
The C on gold, no. This is only 50%. The 1.618 is this right here. If you took this distance, do it here. Here, have some fun, folks. Take a look at this. This high right here was 1301. Okay, the low right here was $12.9. It's $11, correct?
Yep, pretty much.
Okay, multiply 11 times 1.618.
Let me do it. Wait up. I can't do that in my head. Can you do that in your head?
Yeah, 17. Well, I've got a chart in front of me. No, I had my trading cards, so when I traded on the floor, I had these written down because we didn't have computers and stuff, so I had to do it by hand, and I
What was
have
it?
them on
11
little
times
plastic. Yeah. Well, 11 times 1.618
what?
is 17.
That is 17.79. There you go. Yep.
Yeah. Okay, and then you add 17 to '09 to
To
20
to 20
and
to 1290.
1290,
Yep.
117.
And you get 1307.7, and that is how
Yeah.
Larry gets his 1308.
Yes, sir. That's the one.
Beautiful. All right, fantastic. There you go, guys. So that stuff as well, just so you know, you can automate because that's just a pretty simple calculation. As Larry said, you can do it with a calculator. Your computer can do it without you being in front of the screen. So that's some pretty cool stuff there. All right, I'm going to go one more question. Let's have a look. Okay. One more. Okay. Okay, this one's from Lubos. Lubos asks us a lot of questions all the time. He's building some really good models. Hello all, did you try to apply this also in some other way? I mean, to find some other parameter, not just price and time. So for volume, etc.
I've never looked at volume. I've looked at it a little bit. I watch for spikes, of course, big, and I watch for record volume, of course. But other than that, no. But volume is the pressure cooker that makes this stuff work, So it does. It's there, but I keep it as simple as possible. But it does help to understand volume.
Fantastic. All right, what I'm going to do, Larry, I'm just going to, while you're on, a couple of people asked for that link for the indicator, so I'm just going to post that into the chat again. And then what I'm going to do is, have you got any last thing you want to show on these charts, Larry, before I switch back over?
I don't think so.
I think you're showing some pretty cool stuff. So I think that gold one, that was a really good example of some live trading, I think, for people. So I don't reckon you can get much better than that. That was pretty cool. Hey, what I'm going to do, I'm just going to switch you back over, and I'm going to bring up my PowerPoint again just so I can finish up. So see if I can work that out. All right, I think this is coming back to me. All right, so we got me back again, guys. So there you go. So thanks very much to Larry, and thanks, guys, for the questions. I'm sorry I couldn't get to all of them. We probably will be able to get a record of the questions, so we might be able to get in touch with you and answer some of them offline. Also, what you're welcome to do is to contact me. I'm going to give you my details in a second, and then I can pass on.
If they wanted to email me, it's just larrypesavento@gmail.com.
Can't forget that. So, all right, there you go, guys. I reckon they'll probably get inundated, Larry. So,
if I get more than 3, I'll be shocked.
No, I don't know. I think it's been pretty popular.
Hey, I make book on it, buddy.
That's right. All right, let me have a look. So here's my details, guys, as well. If you need to contact me. Any other questions for Larry? If you want to ask me, you're more than welcome. Any questions about the indicator? Basically, what you got to do is you just got to use the link and then just register through that form. If you get completely stuck, then email me. But I'd really prefer you just go through the form because that's the quickest and easiest way. If you email me, I'm going to probably tell you need to register through the form as well. But if you get really, really, really stuck, then I'm more than welcome to contact me there. That's all from me and from Larry as well.
Hey, I have one other question. Why is your email address so short?
Mine?
There's only 19 letters in it. Is that because that's because you don't get spam, right?
No, I've got more than 19 letters in my email.
Well, look at Edwin Corneliuson, and my God, how many letters are
that's about 27 as it is. So without the trade view.
That keeps you from getting spam. That's from what people told me anyway.
Oh, you reckon? No, well, there you go.
Well, I don't know. Hey, I'm so illiterate in computers. It's ridiculous.
I don't know. It's just my name.
Hey, folks, thanks a lot for joining me tonight. I appreciate it. I hope you learned something. For the 1 or 2 people that heard something, follow through, Bubba. It's a no-brainer.
I'll just tell you, there was 1,000 people registered, and there was hundreds of people on the webinar tonight. So thanks to everybody who attended. We had a really good turnout. Thanks so much to Larry. Really appreciate it. And as I was going through, actually, Larry, today, I just knew this was going to be one of the best webinars we've done, and I actually think it was. So thanks very much for joining.
Only if gold goes down.
Well, I tell you what.
That's okay. No, it's all right.
Yeah, I'd be keen to see it. I reckon, like I said, that was some good live examples tonight. So
We'll see
awesome.
what happens.
All right,
Hey,
guys.
thanks, Eddie. We'll see you soon.
Thanks,
see you in
mate.
Hong Kong.
Thanks,
Yep.
mate. We'll see you soon. Take care.
You
And
bet.
guys, have a
God
good
bless.
night. You too. Catch you. Bye.